Reeves weighs staggered stamp duty payments to revive housing market. Homebuyers could soon be given the option to spread stamp duty payments over several years rather than paying the tax up front in a lump sum, under proposals being considered by the Treasury ahead of budget negotiations with the Office for Budget Responsibility, OBR. The plan, designed to inject momentum into the housing market and improve labor mobility, would see buyers pay stamp duty in installments, easing the immediate financial burden of purchasing a home. Technical details of how to safeguard Treasury revenues are expected to be thrashed out in talks with OBR officials due to begin in 2 weeks. The idea surfaces as Chancellor Rachel Reeves faces a £25 billion black hole in the public finances, with Deutsche Bank warning she will need to raise taxes or cut spending to maintain her fiscal rules. The OBR is also expected to downgrade productivity forecasts, with even a 0.1 percentage point fall in growth projections potentially wiping £9 billion from Treasury calculations. Unlocking housing market stagnation. Supporters of staggered stamp duty payments argue that the reform would remove a major barrier to home ownership and make it easier for people to relocate, boosting flexibility in the labor market. Advocates point to the Tony Blair Institute for Global Change, which last year proposed a government-backed loan scheme allowing stamp duty to be paid over up to 20 years, roughly the average time Britons spend in a single property. Under this model, any outstanding debt would be written off if the buyer moved house within the repayment period. Such a change, researchers suggested, would not affect the deficit since the revenue would still be recorded under Reeves' fiscal rules. Analysts have also noted that the reform could make stamp duty resemble an annual property tax, spreading costs more fairly across homeowners. Industry backs reform. Property platforms Rightmove and Zoopla are among those supporting a campaign to allow buyers to stagger payments over 5 years, while estate agents have argued that such changes could encourage activity in a slowing market. The proposal forms part of wider tax reforms reportedly under consideration, including a potential national property tax and local property levy that could eventually replace council tax. However, critics remain cautious. Simon Gerrard, chair of Martin Gerrard Estate Agents, has warned that the government's broader tax overhaul is motivated by a desire to raise revenues, and risks saddling homeowners with punishingly high bills if council tax reforms go ahead. Thanks for watching. Don't forget to subscribe, like, share, and leave your thoughts in the comments. Your support means a lot.